we are going to be talking with Lauren Jackson in a few minutes about strengthening your client relationships. But I do want to take a few minutes just to let you know some of the things that have been happening because there's, lots of good news on the KA Canada front this fall, that's for sure. First of all, the what's going on with the Redeemer University and the possibility of bringing on board the CKA into Canada. So there's a webcast that we've got coming up in less than 2 weeks that if you're not registered for, I would encourage you to register for it. So that's on November 18th. It's on the Tuesday. I did put a link into the chat box, so feel free to go ahead and register for that. And Gerard, great to see you on the call. Gerard has been very, very busy this fall with Capstone and the launch of 2 new products, biblically informed investments. And I am, for one, very, very excited to see that. Feel free to reach out to Gerard. And we may have to do a call like this in the very near future to give you some more information and update on that as well. If you're coming to the conference in February, that would be awesome. If you're not, consider coming before the price goes up, because it is, I realize it's getting very costly for us to go with the dollar exchange and so on. But let me know if you have any inquiries about the conference, February the 11th to the 13th. The expectation is that there will be approximately 3,000 in attendance this year, which is an amazing number. And for those who have been there, it's amazing to come into a room and worship together with last year up to 2,700 other Christian financial professionals. So it is pretty amazing. The other thing that I want to make you aware of is the event that's coming up. We're planning our event for May in Calgary this year. So we're going to Western Canada. So I've also got a link in the chat if you are interested in participating in the KA conference, which will be on the Tuesday afternoon, the 26th. We don't have all the details yet, but the details will follow. But please let us know your intention, because there are a number of organizations that have tables for the Spark event that takes place the following 2 days, the 27th and the 28th. So let me know your intentions, because we want to bring some Kingdom advisors together at that Spark event. And we're a title sponsor for that event. So we want as many Kingdom advisors and potential Kingdom advisors to be present at that event. So I think that's it for the announcement. Please feel free to use the chat box to answer or ask any questions that you might have as we go through the presentation. But we're going to bring in our guest now. And by the way, if you have any questions for me, please feel free to reach out after the call. And stay informed, stay in the loop as to what's happening. So register for our next event on the 18th. But for now, I want to welcome Lauren Jackson to the call. And Lauren is really no stranger at all to our group. Lauren is really, I'm going to say he's the founder of what is now Kingdom Advisors in Canada. And he always talks about Lauren squared, and that's what you're going to get today, is Lauren to the multiple. And he brought me on to, share the burden and share the load of growing the network in Canada. So Lauren, I appreciate your leadership over the years. And your continued leadership in leading CNCF. And we appreciate you joining the call today, because we're going to learn a whole lot about donor-advised funds and how to use them strategically. And Lorraine is going to join us as well later on the practical side about how to set up a donor-advised fund. But Lauren, I'm going to turn it over to you for a little bit. We'll have some conversation as we go through here. But talk to us a little bit about how you can strengthen your relationships, by using creative philanthropy.
Well, great. Thank you, Lauren, and thank you all for being on the webinar. It's great to be back with you guys. I see a lot of people there that I know. And Gerard, I was just in your office last week. Didn't get to see you, but Glenn made sure I had a good cup of coffee, so I was fine. Everything worked out well. Yeah, thank you for joining us. And so let's get right into this. I've asked Lorraine to join us a little later on because she knows this stuff with her eyes closed because she's the one that you'd be dealing with if you were setting up a donor advised fund for a client. So I think that you'll find that to be helpful. So here's a little bit of our agenda. So a little tell you who CNCF is in case you're not familiar with us. Charity versus nonprofit. Yeah, there's a lot of confusion there. Differences between charity and a foundation, more confusion. Public foundations versus private, even more confusion. So I'm hoping that I can clear some of that fog today and what CNCF is like versus others. We'll have just a little bit on non-cash donations because I always want to highlight that one because it's good for you all to be thinking about. And then how easy it is to set up a DAF. And that's where I'll bring Lorraine in. And then who should be part of the conversation. So let's get started. Who is CNCF? We're a community of like-minded donors advancing the kingdom of God. So if any of you have been to KA in the States, you know that they talk about NCF, National Christian Foundation. Well, they like to call us NCF Canada, which might have been a good name as I think about it, but we called ourselves Canadian National Christian Foundation. We're a non-denominational Christian public foundation. We're a federally registered charitable foundation, so we serve Canadians right across the country. We have over 70% of the assets are managed by you. And I should measure sometime, Lauren, how many of our advisors that work with us are KA members versus just the whole group of advisors. And I would suggest that it's majorly KA members, that's for sure. And then we're governed by a national board that is made up from right across the country. And they sign a statement of faith every year agreeing that, yes, this is still what I believe. It's, if you want to know what it's like, it's on our website, but it's also the same one that Evangelical Fellowship of Canada uses. So that's where that came from. So a charity versus a nonprofit. This can be confusing. Both operate as a nonprofit on a nonprofit basis. In fact, I was just talking to somebody earlier today in the banking world, and they said, "Well, are you a nonprofit?" I said, "Yes," but I had to explain to them that we're different than because we're as a registered charity, we can issue donation receipts for funds received. A regular nonprofit cannot. So that's where it kind of gets a little confusing sometimes. So they have a similar income tax situation to us, but they don't issue tax receipts. So that would be kind of the major difference there. And I find that oftentimes on the internet, your language can get rather confusing, and it'll call us a nonprofit. It calls others nonprofits, and they don't issue tax receipts. Somebody's got their mic on, so I'm getting a little feedback there. So some examples of a nonprofit would be sports clubs or associations, community associations. Oftentimes are nonprofits, but they don't issue tax receipts. So there you go. That would be the key difference. And then what about a charity versus a foundation? Because we are registered as a registered charity from a tax perspective. So both a charity and a foundation are what we call donees, or Canada Revenue Agency calls them donees, meaning that they can receive money and issue tax credits. That's basically so we would be a registered donee with CRA so that we can issue tax receipts, and so can charities. So you all know lots of charities and are involved with charities that would be also issuing tax receipts. So they both can. But here's a difference. Charities are supposed to spend 80% of their income in any given year in the charitable work that they're registered for. So if they're registered as a to help the poor, then they need to be expending 80% of that. So, whereas as a foundation, we have to grant out up to five, we have to grant out, sorry, 5% of our asset value. So it's the total sum of our value at CNCF, and we have to be granting out at least 5% of that. By the way, we run at about 40%. So, because we have a lot of donors who set up a DAF and then give the money out right away, and they may do that every year, pass their money through there. In fact, I do that with my own. I give one lump sum to CNCF in the first quarter of the year. That's called first fruits tithing. I like to do that early in the year before anything else. And then throughout the year, I'll make grants out of that to the charities that I want to support. So, and that's what a lot of donors do, which is why we end up giving out a lot more than 5% of our total. And charities carry on charitable activities. So they would be, providing a soup kitchen, providing beds for the homeless, all those kind of things that charities would do. But foundations, we generally are an organization that flows financial resources to the charities. We're not competent in competition with the charities. We are actually a method of a donor giving it to us and having us flow that money through to the charities they want to support.
Lauren, can I just jump in with a quick
Yeah.
question? What makes CNCF, I guess, is CNCF kind of special in the industry? What makes you unique? Is it the name Christian?
Well, that would be one thing. I actually have a slide coming up on that.
Okay,
So,
great.
yeah, but let me just deal with the Christian thing. By the way, a lot of Christian organizations have been taking that out of their marketing material, and we have not. We, in fact, passed a rule last year that is now in our articles that says we cannot change the name Canadian National Christian Foundation without 100% approval of the board. So if you have one guy vote against it, and as long as I'm on it, I'll be voting against it. But that's a way to keep the name safe. But yeah, thanks for asking that because I will cover a little bit on that. So charitable foundations. So there's different kinds of foundations. There's private and public, but a foundation is considered private if more than 50% of the directors are related or non-arm's length by CRA rules. So if the directors, the board, in other words, of that foundation are related, more than half of them are related, then it's a private foundation. Or if more than 50% of the assets were put there by that same group of non-arm's length people, then that would be private. Or if direction and control of the assets is held by one or more non-arm's length or by a corporation. So in other words, if I set up a corporation and then I set up a foundation and I manage it all from my corporation, then it's a private foundation. So this requires it be a private foundation, but private foundations are not private, which is rather interesting, isn't it? In fact, private foundations are very public. Public foundations are very private. Interesting. Why do I say that? Well, here's why. Public foundations can be very private because a donor puts money with CNCF and says, I want to give it to XYZ charity, but I want it anonymously. Well, they don't know where it comes from. We have a donor who's been doing that and giving large gifts to some charities, and they drives them crazy because they want to know, okay, who's sending this money? Can't tell you. It's a private. They've asked it to go confidentially. That way they don't get buried with all of the requests and all that other stuff. Anyhow, that's they can do that by being anonymous, or they can do it by saying, yeah, tell them where it's coming from. But in a private foundation, first of all, it does everything you see on CRA's website would tell you exactly who it is that's giving through that private foundation, how much they've given and where they gave. And so if I'm trying to raise money for a soup kitchen, I go on there and find out, okay, who on here gives to soup kitchens? And if I find a guy that's giving to that, I might go, okay, I'm going to go sell my ideas to him or to her. So I think As I say, it's very private if you're in a public foundation, because when it comes from CNCF, we've got hundreds of donors. They don't know what donor it came from. Advantages and disadvantages of the foundations or a private foundation. So here's some advantages of private. The donor feels they have control over where the assets are invested. Well, they can do that with us because they could ask you to manage the investment. So they would really have control over where the assets are invested through you. Uh, they allow the donor personal vision of giving. Well, they could kind of do that through us. And the next one is they feel like they have control and the pride of having their own foundation. Well, I find that a lot of people now setting up foundations with us because you name your fund, you name your donor advised fund. But I find that a lot of them will set it up and call it the Lauren Robinson Foundation or the Tom Lip Foundation, whatever it happens to be. So I think that that one kind of goes away because you could do it as well with CNCF. But there are some disadvantages. The costs and the time involved in setting up, and it's now taking anywhere from a year to 2 years to get a charity approved in Canada. So that would be, and they're really sticky, guys. I got to tell you, they're really sticky because they're concerned about money laundering and about all this kind of stuff going on through charities. Ongoing cost of financial statements and T3010s, which they have to complete. And so instead of doing a tax return, at a foundation, we do something called a T3010, which has to show where every dollar came in and where it went out and how it went out, and that it was a qualified charity that it went to, all those kind of things. And then there are annual disbursements quotas, and they have to report those to CRA. So they have disbursement quotas, and of course it's on just during their own little fund if they're not with somebody like CNCF. And as I said already, there's no privacy. So some public foundations. So at CNCF, we do all the administration, including all the recording and record keeping and reporting to CRA and all of that kind of stuff. And as I already said, CNCF allows your donor or your client, our donor, to choose you as their investment advisor for the fund. I'm going to have Lorraine describe that a little bit in a moment. And then the public foundation allows for anonymous giving. And the disbursement quota is not an issue because we have such a large percentage that we're way over the 5%. And the donor could name it with their own family name. So it kind of takes away some of the advantages of maybe a private. We have online software that allows the donor to add donations online. It's really easy to use. I use it. By the way, in our office, I'm the test buddy because if I can use it and I understand it, then they figure anybody could figure it out. So that's what works for me, and I'm happy with that. You can also make grants there. You can go back and see the history of your giving, and I do this every year because as I give throughout the year, I think, did I give to this charity this year? I go on my client portal at CNCF and I can see when I gave, how much I gave, all that's right there. And it allows your client to feel close to their money because they can see it online. They can see what it's growing. They can see the investment return. They can see who they give to and when they gave last and all that stuff. If they wish, they can allow you to see it as well if they choose to do that. Obviously, they wouldn't want you making grants out of it, but they can, if they approve it, they could allow you to see what's going on in there as well. And then some disadvantages to using CNCF would be that if they want to gift to somebody that's something that's not compliant with biblical principles, of course, then we would say no. So we've had a rare occasion where somebody would ask us to give to Planned Parenthood or something of that nature that we would say no. We would, according to our statement of faith, that would not work. So we would turn down being able to give to that. Just quickly, hopefully you all know this one, but I always want to keep this one in front of you because if a person has a choice of giving appreciated stock or giving cash, give the stock every time. And then here's what you've got. If they had $100,000 worth of Apple stock, they paid 25,000 for it. If they were to sell that stock and give what's left over to charity, this is what the left side is showing you, that they would have to pay 16,000 in capital gains tax, 83,000 charitable receipt. But they could have just passed the stock along. And I think Lorraine's going to just touch on that a little bit when she speaks about how easy that is. But they could have passed the stock along to us. We don't pay tax, so there is no tax capital gain. So that way the client got $100,000 tax receipt instead of 83, and the charity gets 100,000 instead of 83, and the government gets 0. So why should generosity be part of your client conversations? Well, here's some reasons. According to the Canadian Association of Gift Planners, I don't know if you're familiar with them. Some of you are probably members of that. I am, but I think that letters are wrong on there, but it should be CAGP. As the survey said, 49% said they would like to have an estate planning discussion with an advisor. So half your clients are saying like they'd like to discuss this. They need somebody to talk to about this. 50% said they would like to have a discussion about the tax benefits of giving to charity both now and from their estate. So again, half your clients are saying, I need some help with some of these things. And 23% said they would like to talk about legacy planning, long-term giving kind of things. So some other advantages to you as an advisor. Again, Canadian Association of Gift Planners, 82% say it's good for business. 95% agreed it strengthened their relationship with their client. I believe it does, because when you start talking about something as personal as their giving, that you're in at a different level than you would be otherwise. And 90% said it helps extend business with clients and clients' family and their network so that they stay connected to that family as the older family ages out, and now as you're managing on behalf of the younger family because they've been involved in this all along. Good idea. So advantages to you. First of all, and I double started because that's the most important one. As a KA advisor, this one would be the most important and should be to all of us. It fulfills your God-given purpose. You don't have the job you have by chance. God uses you in that role, and that's a very, very important role. In fact, I think the Bible talks about that and the importance of that when it talks about teachers are held to a higher standard. I think we are teachers in the financial world, and we need to be fulfilling our God-given purpose there. So that's a very important one.
And
More
I
services
think,
to your,
if I could just add
yeah,
to that, and you're kind of saying this, but not quite saying this. I would use the word responsibility. It's a responsibility that we have as steward to manage client relationships well. So not only does it fulfill your God-given purpose, it helps you fulfill that responsibility. So just wanted to chime in with that, Lauren.
yeah. Well, see, you can be that direct. That's because you're the big boss of KA. I shouldn't be quite that direct. All right. More services to your clients prevents competition because I assure you, when you get dealing and helping them with their philanthropy, with their giving, they're not going anywhere else because they don't want to have to start that all over again. And it helps clients with their philanthropic decisions. You continue to manage the investments, and it sets you apart. So um, here's how CNCF can help your clients just quickly. Anonymous giving, a large one-time source of income. Maybe they sold their business and they got to give away a lot this year. They don't know where they even want to give it to yet. Well, there's a huge advantage to your client to be able to give it to CNCF, get a charitable tax credit right away to use on this year's tax return. But they may not give that money out for 4 or 5 years or longer. So that's entirely up to the client. Maybe they're giving to a lot of charities like I used to do, and then I'd have to try to get my receipts. And invariably, by the way, if you don't check your receipts every year, you should. I didn't used to until a CPA told me. He said, "Oh, I always check." And he said, "I find that there's some always missing." Well, I started finding there was some missing. So I don't do that anymore. I give it all through CNCF and I get one receipt. So that makes it easy. Non-cash gifts, we're constantly dealing with non-cash gifts. Gift that keeps on giving over time. So maybe they want to set up an endowment long term that's going to continue giving long after they're gone. And then estates, you can have a letter of direction on file with us. Lorraine and I were working on a couple of these just in the last day or so, where people left CNCF in their will and they had a letter of intent with us at CNCF that says, when you receive this money from my estate, here are the 5 or 6 or 8 charities that I want you to send that to. And here's how much. So that makes it easy for them because in their will, they only have to name one beneficiary for all their charitable giving, CNCF. And then if they want to change any of those grants that they've got, so maybe they change churches, well, they could change the letter of direction. So it makes it really easy. So what is a DAF? It's really just a charitable giving account. You get a charitable tax credit right away. And then the donor recommends the grants to their favorite charity at their timing. There is no restriction as to the amount a donor can grant. Listen to this. This is very important. A lot of the banks and mutual funds companies that are out there are restricting how much they can give out in any one year. I had a donor call and wants to give to a pregnancy center. The bank he was dealing with out of his foundation said, no, we don't support pro-life organizations. So he said, okay, and I'll move it to CNCF. And they said, you can only move 10% a year. So it would take him 10 years to get out of there. So very important piece. And there is no setup cost. It can all be set up the same day. So it's quick and easy. Family is involved. Funds can be provided to the DAF for a bequest. I already talked about that, so I won't spend time there. And then why CNCF for Christian clients? Biblical worldview. The same reason that a client should be working with a KA member, any Christian client. When I do my webinars on estate planning for people, I'm always talking about if you need a financial advisor, go to KA and I send them to your website so that they can find you guys in your area because that's a very important one. So it should be similar biblical worldview.
And just a note on that on the website to be discovered, you need to be a CKA because those are the advisors who are published. So to be listed, make sure you get your CKA and you're added to that public list.
Yeah, and even more than that, the CKA training material is fabulous. So and it's been updated. I've redone it again since it's been re-updated, and it is well worth your time. So international giving. So donors today are becoming much more attuned to world needs. The world is shrinking, as we know. We often say that. So they may want to give, a donor may want to give to a charity in another country, especially if you're working with a donor from another country, maybe from Asia somewhere or Europe, I don't know where, but they would like to support a charity back in their homeland. Well, CRA only allows a charity to grant to a charity in another country if they have an agency agreement. And that can get very complex. So due to the complexity of that agency agreement stuff, most charities have chosen not to get involved in that. It's because, if you set it up for one, you got to set it up for 101. So it's gets very complex. But we're fortunate at CNCF in that we have an agency agreement with an outfit called TrustBridge Global. And then they do the gathering of all the information from the charities in those other parts of the world and feed it back to us. So our software is connected with them. In fact, they build our software that we use for this kind of work. And as a money goes out to a job or a project in another country, that country has to report back through TrustBridge to us through the software that says, here's every dollar you've sent me and how that has been used. Because we have to be able to show Revenue Canada that we used it in line with the objects of our incorporation that say that this is what we're about. So we can't be just using it willy-nilly. We have to use it for things that are in our articles of incorporation. So if you have a donor who would like to do some international giving, there's a way to do it. So what about the other new thing that's on in town? And I hope you've heard about this because this is getting more and more recognition, something called impact investing. So here's what it is. So it goes beyond grants. So when a donor has a donor advised fund, they can make grants to charities they want to give to. Well, God has designed economy to run on generosity, and yet charity alone can't solve all the world's problems. So in many places, a job would be way more important than just a handout or a chunk of cash. So impact investing actually takes those two and puts them together. The same dollar of charitable capital can make an impact twice. In other words, you invest in a DAF, a donor puts money in a DAF with us, and then says, I want to use that as an impact investment. So here's what that kind of thing would look like. So they make a donation, then they choose to invest a portion of that donation in impact investing. So an impact investment corporation like Third Way Capital, which is registered out of Toronto, Third Way Capital is they're actually in Africa, and so what they do is they buy up farms and make potato farms, and they employ people, and the returns from that impact investment come back to the donor's DAF. So the donor takes a chunk of their money, maybe half of it, let's say, because they still want to do some granting in Canada, but they take half of it, put it in this impact investment, and as that impact investment creates earnings, it comes back into the donor's DAF again, and then can be further invested. Now that allows the donor to use the money over and over because they've got a tax credit for it in the first place. They've now invested it for the good of people, help other people, and then as that investment comes back into their DAF, they're now able to reinvest that back out again, or they could choose to grant it out. That's up to them. So just kind of wrapping it up, a donor could give cash, and this is where I'm going to bring Lorraine in at the end of this. So gifts of cash, public stock, real estate. By the way, just as a reminder, real estate does not pass through to a charity like capital or like public stock does. You can't move the capital gain into the charity's hands, unfortunately. But you could give real estate to a charity, and we have accepted real estate in the past. And when we did, we would then sell the real estate, but they have the tax credit that they can use against the capital gain, which happened because they gave us the real estate, of course. But so it's a little less attractive than giving public stock, but it still can work. And then private shares for tax planning, we get quite a few private shares when people are doing kind of estate freezes and stuff. So those of you who do that, RRSPs and RIFs, of course, if they leave that to a child, it's fully taxed in their estate on top of their other income. Whereas if they gift it to charity, it wipes out the tax liability on that. And then last but not least, let's not forget about life insurance, because some of you even on here have brought clients to us who had an old life insurance policy, and by getting an actuarial calculation on the value of it based on the person's age and health condition, there could be quite a substantial tax credit created out of that. So old life insurance policies can work quite nicely for that. So let me take this down and stop sharing, and I'm going to let Lorraine come on and share her screen. So I've asked her to just share, if you're sitting there and you're saying, well, okay, I'd like to do this. How do I set up a donor advised fund for my client? That's what Lorraine's going to help you with.
Hello, everyone. So I'm going to share my screen now. Okay, and that can be seen. Okay. Lauren, can you confirm that you can see the
Okay,
screen?
all
Yeah.
good, Maureen. Yep.
Okay, thank you. Okay, so basically, I'm going to help with the steps. If you would like to help a donor open a donor advised fund. Lauren Jackson actually asked if I would just distinguish what the difference is between a donor advised fund and an investment account. So we do have separately managed investment accounts, which many of advisors do help us with. That is a relationship between CNCF and the financial firm, the advisor. It could be one account, it could be a couple of different accounts. That is separate from an actual donor advised fund. A donor advised fund is a separate account that is held under the umbrella of Canadian National Christian Foundation. The relationship is between the donor and CNCF, the foundation. And generally, once a donation is made, CNCF becomes the owner. The donors let go of their ownership of the gift, but they maintain the ability to give recommendations for that gift. Um, Now, as the advisor, if you'd like to help the person to open that on the CNCF website, simply just click on Get Started and open a giving fund. I've just started a form that's been pre-populated. Um, so the donor can go on this themselves, or many financial advisors like to be able to help their clients with the donor advised fund. They can help to choose a name for the fund. Quite often, it might be the family name. It might be something that resonates with that person. The fund type, it could be individual, it could be a family foundation fund, it could be from a ministry or even an organization that they're setting up. And basically, we just follow the prompts of the basic contact information in there. A donor advised fund could have one advisor, donor advisor, or there may be a couple, so both spouses may want to add on it. So you just click yes to add more or no. Um, and then this information is optional, but it is very helpful for us to know, as well as you, the advisor, to know what a donor's intentions are with their giving. Quite often, when working with a financial advisor, publicly traded securities are used because they're so tax efficient, which we'll talk about a little bit later. And then how much they're intending to do each year. And that helps like both us to know what amounts we should keep available for their giving, as well as you with your planning with your clients. There is an area where a person could also make a recommendation. So as a donor, they can give advice of either giving gifts to charities, but they can also provide advice or recommendations of how those funds are held. We do have some pooled investments that they can go into if it's intended for a long term, but quite often a person that you may be working with, or they love their financial advisor and would like that financial advisor to be able to continue managing those funds. So that is a possibility. And so if you're working with them, you can go here and then fill in the information for the financial professional. The investment account, CNCF will work separately with the financial advisor to work that part out. This is specifically for the donor advisor to open the fund. Or if they're not sure, they can just say, we'd like to discuss later, and we'll talk to them about that. And then there's also an area of goals. So there's one section that helps us to understand what they're intending this year or future years of coming in, which will help you with your financial planning, but also once the funds are in the donor advised funds, what their intentions are. Is this intended for the long term, short term? That helps all of us with the KYC and how those funds should be held, because prudently, if it's going to be for a while, it's a legacy. We want to ensure that there's some possibility of some growth over the long term. And there's areas for comments there. So every donor advised fund, if there's going to be funds that are held for a while, having a succession plan is a really important area. Can also help you with your discussions with your clients about the estate planning area. But for a donor advised fund, even though the funds have been transferred and they're no longer owner, but there may be funds still there when the person is not able to give advice because they've become incapable or they've passed away. So then they have an option. So there's an opportunity to have discussions with the your client about next generation transfers, not only with everything, but with the donor advised fund as well. So you can have an option to add adult children to make future decisions. These DAF successor advisors wouldn't be signing anything at this point, but they can be added later on to there. And or if they don't have, oh, sorry, was there a question?
Yeah, Lorraine, I was just going to
Yeah.
say, help them understand the DAF advisor versus them being an advisor, because sometimes that gets
Yes.
confusing.
Thank you. Yeah, there's the word advisor is used a lot. And so basically for a donor advised fund, because it's an advised fund, a donor becomes the advisor of the fund. They can give us recommendations for charities, and they can give us recommendations to how those funds might be held or where, providing it's within our investment policies. A financial advisor, we actually usually try to refer as financial professionals to keep it separate. Those would be you, the financial professional who's working with us or them with their other investments. Okay. Um, yeah, and so there's options for succession. Either it can include the next generation, or if there is not a next generation, then some people will prefer just to have the funds given out to charities. That could be all at one time, or it could also be over a long period of time. Just thinking about it, if somebody has a large estate, there's, a couple $1 million and it's going to 2 or 3 charities, does it make sense for that charity to receive everything all at one time? Sometimes it does, but other times it might make sense to have that given out over a few years or several years, right? So that can be arranged. Okay, and then there's information there so they're aware of what the costs are. These are just the basic ones. When it's separately managed with a professional advisor, the costs are a little bit less. We can go through those details. And then there's an opportunity for the person to read the policies and guidelines. They'll do an agreement. This will trigger an email to come to the client, donor, and they'll confirm that. Once that is submitted, CNCF receives the application immediately, and we do a review. And typically within a business day, the donor or client is going to receive an email that welcomes them and has an activation to log into their giving portal. And so even if you're intending to help somebody with a one-time gift of securities, this could be a good way to help them get set up. We're going to set up a giving account anyways. So why not help them to give a name for their fund? And then once they do that, so there's just the one form. It used to be that we had lots of paper forms that people needed to fill out to make a recommendation to give to a charity, but they will now receive an online portal. And I've just kept an example of a demo of what the portal will look like once they log into it. They're going to see what their whole balance is and what money is available for giving to charities. And if it was invested, then there'd be an area where it would hold with the advisor. And then so if they want to recommend for a charity, they just click on grant, choose a charity from the drop-down list, and choose an amount. They'll see what's available as soon as possible and submit. And then CNCF takes it from there. So no paper forms that they need to complete.
That's awesome. I want to make sure we leave enough time for questions.
Okay.
Lorraine, I don't know if you were done or
Yeah,
was
I'll
a
stop my
question.
share.
There was a question online about the instructions for option B.
So the funds can be held either as cash at CNCF. Those funds are immediately available for granting to charities. And if it's for long term, then those funds can be held in an investment on it, which could be either some CNCF pooled funds or with an advisor. And yeah, and then so we would work with the donor client. There's two-way relationships. So one is CNCF and the donor, that's the donor advised fund, and the investment account. Basically, once that's opened up, CNCF is a client of the financial firm or financial professional. So we communicate that, and so then we end up with a three-way relationship between those two.
So the question had to do with who is administering the funds in the case of the advisor's death.
Of the donor advisor?
Yes, the donor.
Oh, the donor advisor. Thank you. Yeah. So that is why the succession information is there. Um, so um, so if the donor advisor passes away, then we're going to follow what succession information they put in. Either it's going to be another family member. If that was their choice, they're going to provide their contact information for us. We do our best to communicate with donor advisors on a regular basis. And as people are getting older, it's always good to review like, okay, right now we have the adult children as the successor advisors. Does it make sense to maybe move them up to a co-advisor? So that's just, again, just with any kind of generational planning is a good idea. If there's nobody named, then it's going to be the charities. If the whole section is completely blank, we're going to be connecting with the either the executor or following those what we see has happened in the past. The last resort would go to the board of directors, but it would be charities that they've been working with. But that would be very rare because we do try to keep communications and ensure there's some succession information on there. Yeah.
Awesome.
I hope that helps.
Let's do a simpler question. What about the minimum to set up a DAF? One of you want to address that one?
So just a basic, simple DAF. We no longer have a minimum to set it. We recommend that it's 25,000 to open one up. One of the unique things with CNCF is we don't want to stop people from giving to charities. And yeah, so there is no
That's
limit, but there,
recommended, but we don't hold them accountable to that. So there is we really don't have a minimum on
yeah, yeah.
on our drafts at all.
Yeah. So basic one, we suggest or recommend 25,000. If it's separately managed with a financial professional, we would recommend at least 100,000 for that. It is also possible for an investment account to be pooled. So if it's a large donor advised fund, then a separately managed one-to-one works well. But if you have a few clients that maybe don't have that much, we can have one investment account with one advisor and pool it. And so we can actually have like 5 different donor advised funds participating in our accounting system enables us to do that.
So how is the online portal, or is the online portal connected to the actual investment account? Let's say someone has an account with RBC as an example.
Yeah, so if we have something like that, so what we do is because CNCF is the client of our RBC as an example, we will receive statements and have CNCF will have online access to the investment account. We will reconcile and update the account every month. And so the donor will be able to see what that value is. The donor does not see every underlying fund that's within the account itself. They'll just see the total balance of it.
Good. Is the gift sent to the charity by check or direct e-transfer? How is
It's a,
that done?
it's done efficiently.
Efficiently. Very good.
So every charity that is set up, we do our best to get them set up for EFT, direct deposit, and we do have an efficient team that will send out the grants. Like if it's initiated today, by next Wednesday, it'll be in the charity's account. It should be. Yeah. The first time it might take longer if we don't already have their information, of course.
Right, right. And the nice thing, I guess, is the donor themselves can administer a lot of that, but the check itself or the payment, CNCF is going to look after that side of it.
Yeah, yeah. And when the grant is given goes to the distribution goes to the charity, we send a notification to the charity so they know where it has come from, if the donor wants their name to be known.
Yeah, very good. One great question, which I know is a question that you guys love to get, is how do I transfer a DAF? Somebody already has a DAF, an advisor, or somebody, a client of an advisor, and they want to deal with CNCF. How would they go about transferring their existing DAF to CNCF?
Yes, that happens. So basically, from the DAF that is current, they would make a recommendation, a grant recommendation to the new foundation so they can make a grant to CNCF. And that will bring the funds into CNCF and then they can either give from there or we can arrange to have some of those funds invested if it's intended for the long term. Yeah.
One other question that I have, it seems very easy for the advisor to help the client set up a donor advised fund. How easy is it from the management perspective? Are there snags that the advisor can run into, particularly in regards to compliance, for example, to get clearance for them to actually manage that donor advised fund on behalf of the client? Manage the investments is what I'm asking.
Oh, so again, the relationship for the investment account is just between CNCF and the financial firm. We do have investment policies and guidelines that we would share when we're initially setting up the investment account, so which helps with the KYC. And of course, there would be when you're opening an investment account, you're going to have all your regular applications and forms and compliance that you need to go through. Yeah.
Yeah, I guess my question is more in relation to um, like the dealer has to approve CNCF as a client, I assume.
Right.
I'm just wondering how familiar a lot of the dealers are with donor advised funds and the advisor's ability to actually manage those accounts if the donor wants the advisor to manage it.
Okay.
Are there barriers there?
Yeah. So again, when the account is, even though it's for the donor, they're referring it to see like they're letting go ownership of those funds. Right. So then it becomes CNCF becomes the owner of those funds. So CNCF is the client.
Yeah,
And
I
then
don't
so
think,
yeah,
I'm just going to say, I don't think we've had a problem with that that I'm aware of
no.
because it's like so if Gord Wussick said he wanted to send an investment he has over to me, the dealer would just send it. I mean, if he signs off on it, then there's no issue.
Mhm.
So we're just another client. So we were it was a Lauren Robinson client, and now we are actually the client, CNCF. So the
Mhm.
dealer really doesn't get any say in it, hasn't had an issue that I'm aware of ever.
No.
Now they manage it for us. They're just happy to keep the money. So
Right, right. Yeah. So can your platform create a charitable allowance is one of the questions that came in, or a sub account for children? So I think the logic here
Oh,
is kind of establishing an account for children to spark the conversation of generosity. It becomes a teaching mechanism. So around stewardship and so on, is there also a use case for schools to teach children how to experience the power of group giving? Wow, some interesting ideas there.
Wow.
Well,
I'll
I'd like
oh,
to take that one because I do know
go for
that
it.
I'm often saying to people, set up a DAF, put some money in it, and work with your kids to give it out every year.
Yeah.
So that the kids are involved in what we're giving to, and they actually see you giving. And you could have it as a separate account. You wouldn't need to even set up a separate DAF. You could have a DAF set up, but then you could have a separate sub account of it that you actually watch and work with your kids on. And maybe you've got 5 grand in it, and they're giving all that money out every year, but they're figuring out what to give it to and working with you. So I like that. I'm not sure we could get into the schools. I think that would be a whole other ball of wax and the way the schools are today. But we can certainly work with somebody to help them get their kids involved in this.
Yeah, and I think one of the things that's referred to in the question here is even the idea of, because I've done it with my own kids, to say, okay, I'll give you $500 to match it. So if they had their own donor advised fund, and this is a way, I guess, to promote the establishment of more donor advised funds long term. My children are now adults, and I want to encourage them to give more. So if I can transfer money from my DAF, for example, into their DAF, and then they match it, something like that, I think is yeah, great idea. Great
Yeah,
idea.
I've seen a few families do things like that where they like a Christmas time, a Christmas present, they make a gift of not straight to them, but to help them set up a donor advised fund, and then they help with their seed funding for that donor advised fund. Yeah.
Yeah, that is excellent. Some great ideas, and our time is done, unfortunately. I would encourage both of you, if you have questions regarding the DAF, reach out to Lorraine or Lauren, which I think is, please provide your email. Maybe that's the best way to.
Yeah, I had it on my last slide, which I didn't end up showing you. So let me do that now. There it is.
There we go. There we go. So the website,
Oh,
cncf.ca, and just the first name at cncf.ca. Pretty simple. So reach out with any questions. Just as a reminder, our next webcast is less than 2 weeks away, and it's about the CKA, the potential of the CKA coming to Canada in a Christian university. This is very exciting opportunity. So I'd encourage you to go on. There's a link in the chat there. Go on and register for that call. And as well for the upcoming event that we have in May. Please let us know your intentions there. I know that's a little different this year to do it out west, but that's exactly what we're going to do. So Lorraine and Lauren, thanks so very much for joining us today.
Thank
And
you.
thanks everyone for taking the time to be part of our call, and hope that we can see you once again in a couple of weeks. Blessings to everyone.
thank you.